we want to dive into what has been disturbing you guys, what we're calling the bias, how you determine bias. So this is the Ethereum 4-hour time frame. Look at what happened here. We took out this high. This high was taken out. Then price grafted lower. After it left this gap behind, we retraced back into this. Before even respecting this gap, it left some highs there, came back and then took out those highs. Wanted to take out, consider this low as I zoom in to make the chart more clear. When you're looking at this chart like this, it's very clear that you're seeing a unicorn model. So the 4 hours CB after buy side liquidity was swept here, price rejected this CB with some energetic move downside, and that is that's the best market structure shift after rejecting the 4 hour CB. So after it caused MSs, we look at the expansion leg and see whether we have a fair value gap, and that is what has been created there. Now price coming back into this fair value gap, that is a sell there, and then it played around here, but at last it delivered down. Now for you to find the right bias, you need to check out what PDRAs are in the time frame that you have chosen to be your higher time frame. For example, if it's 4 hour, do I have any PDRA there? If it's 1 hour, do I have any PDRA there? So after price has tapped into this zone here, then from here now you can either enter this price here, so close above this swing high, and then target according to your risk to reward. Review, we can refine this one lower to 15 minutes. So I want you to consider this, only this price action here. Now that we know we are likely to move lower, so now check out this. So we have a lower time frame BSL. What do we have again? We have market after rejecting this low. We have this candle that took out this BSL into the 4 hour CB. This candle here, that is a valid order block. To the right, we can create this one. Yeah, so that is a very valid order block. So from there, you don't need to take price all the way down, but you can target this sell side liquidity here, and you're out of the game. The problem is greed that tells you, you need more, but I can assure you this move alone is enough. Yeah, look at that. This move from here to here, that is enough move for you to get some profits. So entry at this fair value gap that is here with the order block, we said a higher probability order block has an FVG with it. So entry there, then you take your profits there. Look at the number of pips that we have. That is massive. So for buyers, it's one of the things that should, if you are serious and you've done enough chart work, I'm sure you must have something to do. So once you determine what is happening on the higher time frame, zoom into lower time frame so that you can find your entry. And my entry criteria is this one. You've seen that after we had a 4-hour unicorn, and this one here also is a good entry. Buy side sweep, the candle that took out that high, that is when price closes below, now turned to be a valid order block. From there, your entry, and then you let the trade run as you target the nearest liquidity. A pool of liquidity can be either buy side or sell side. Now that we are selling, then we can target this low here, which is our sell side liquidity. Bottom left. Yeah. So this is the simplest way of determining bias. Look at what the chart has done in your higher time frame, and you see now why I tend to work more on the 4-hour time frame than the other time frames. That does not mean I don't know what is happening from the weekly, monthly, and all that. But when it comes to 4-hour, it clears the blurry. Then the 15 minutes now makes the chart look even more clearer. Then you can easily determine what you are likely to do from this chart here. So this is good. This is something that you should go practice, and just be flexible. Adjust as what the market is offering. Don't be too rigid that you want to stick to something that you see is not likely to play out. But once you determine your daily, weekly 4-hour PDRA, your work is just to relax and wait for price to react from that, and then do the obvious, follow the protocol. Now after 4-hour PDRA has been tagged, move to 15 minutes, and then either you can find a lower unicorn again, or you can use this last up close candle that purged our liquidity into a 4-hour PDRA FVG. Once price closes below that, then now you have your direction of bias. You know that now I'm going to these lows here. Simple and very clear, without too much confusion or noise. Try to make your model too simple that you can explain to someone who is not aware of what is happening, so that he or she can understand what is happening. So this is the second video on how to determine bias. First, mark your higher time frame PDRA, wait for the price to react from that PDRA, and then align your time to lower time frame, and then look for any entry criteria. It can be an order block, it can be an inversion, it can be a fair value gap, it can be a unicorn, and such like. So to that point, I think you will learn something of this. Anything else, any question that might arise, you can throw it so that we can look at it again as we continue this series of 10 episodes on how to determine bias. Make things simple by working with the charts closely. Don't just rely on rumors or what you see. Whatever I've just displayed is something that you can go to your charts and confirm whether really things work that way, or you just want to follow rumors without concepts at hand. I think that is enough for today. Hope you found this insightful. Until next time, be safe.